you've got Gen Zs that now they don't have the income. Let's even go to 100,000. How do you change their future and put them into homes? Do you think the house prices have to come crashing down? Like,
two things: planning,
yes,
and patience. So you have to plan what the minimum down payment required, and then wait patiently.
does the future of income to debt ratio for future homeowners look right in your eyes?
The gap is huge. Only one thing can make it fix: financial literacy.
Whenever I've bought a property, the real estate agents always say, now's the time to buy the property. This is the best time. If you go to a builder, they say now's the time. Whether the economic conditions are like they are now in 2025.
If you have health issues,
Yes,
to whom you're going to talk?
the doctor.
Are you going to plumber?
No.
So when you have to take money-related advice,
Yes.
are you going to take advice from real estate agent, or are you take advice from a builder?
No, from a financial planner.
Who goes to financial planner or mortgage agent first?
Nobody does that. Right. Hello, everyone. How you guys doing today? I'm here with Mr. Vikas Sharma on his podcast. So I'm the guest, but I'm going to introduce you on life and loans. How are you doing, Mr. Sharma?
Oh, well, how about you?
Good. Thank you so much. Today, I just want to have an open discussion around the housing and current conditions. I'm going to pop some rapid fire, some random questions.
Right?
Because to me, I think you're a wealth of knowledge when it comes to the mortgage industry, when it comes to real estate, when it comes to financial guidance, because you've been in the industry well over 20 years now. You've seen the peaks and valleys of what the mortgage industry's gone through. And I think not only are you a great coach, but your life experiences, along with your financial guidance, I think make you a brilliant coach. So without further ado, I just want to jump right into the question. The current market. I have the current real estate market. No, that's not the question. And the current economic condition of Canada in relation to the housing crisis
Understood.
in Canada. As you know, I'm in the entertainment industry. I speak to a lot of first-time home buyers. I speak to a lot of youngsters, a lot of youth. Everyone has a dream. Everybody wants to own a pen suite, a condo, a big house, of course. But put all that aside. I'm talking about dens. I'm talking about 500 square feet condos. The Gen Z population, the Gen Z generation is scared. And I'm going to throw questions to you and please address them. First question, I don't feel like owning a home anymore. I feel like renting is becoming a problem. I feel like, where am I going to get the down payment? Where is this market going? What is the future of the housing market in Canada? Why is it so vulnerable? What is going on with the interest rates? Please address all of these questions into one, as the housing market and where its future lies, how the young Canadians can build a better future and purchase real estate, and what does the future of interest rates look like? So all of those three questions into one.
All right. So that's basically a book of questions.
Yes. It's what gets thrown at me all the time.
So first of all, Ren, thank you very much for this amazing introduction.
Yes.
And I hope the conversation we're going to have.
Yes.
So I will try my best that the words you used to describe in my introduction,
Yes.
I fit well in them. Right?
Really well in them.
So let's start with the question. Like my own daughter, right? So
Yes.
she want to move out, right? And she wanted to buy a house.
Right.
So as a parent, definitely I want to help. But the condition is like that. The prices are keep going down, and the bottom is not hit yet, basically.
Okay, so you think the bottom is not there?
Yes. And because she also in the same industry, and she told me that, Dad, I don't want to buy right now. So it is not the right time. I would prefer to go on rent.
Okay.
So definitely she moved out, but going to rent. And the next question: how much percentage of her salary is going to rent?
Wow.
So I asked question to my daughter: if you have a plan to buy the house in coming 5 years, so how should you be planning it? She said, Dad, maximum I can save a couple of $100 a month in TFSA, RRSP, but I have to, compromise my lifestyle a lot because, these days youngsters want to travel and they want to eat out. So now they're coming back to the more traditional way, right?
Yes.
In the saving way.
Yes.
So first question is, yes, the incomes of Canadians did not increase compared to the house prices.
Okay, so you're saying they both don't reflect one another.
Definitely. So I bought a house in 2007 myself for approximately $545,000. And how come this house in 15 years is, turned to $2 million? It's too good. It's too good to be true. If you say percentage-wise, I'm happy.
Yeah. So what should have been the accurate percentage? Because I mean, this question comes a lot. But what should have been the accurate growth?
Accurate growth, if healthy growth is like, 8-9% is a very healthy growth. Moderate growth, if the house price is going even 7%, yes, not bad. Condos, basically condominiums, 5 to 6% growth is like a moderate growth.
So you're saying the house should be around 1 million?
It was like, yes. So if you see the history, it was like that.
Okay.
I'll give you my example. In 2001, I bought a condo for $129,000.
Right.
And after 2.5 years, I sold for $150,000. So on that time, value of the $20,000 or $24,000, whatever I made on top of that, it was
So it's moderate.
quite enough, basically.
Okay.
The money had a value on that time.
Right.
But the inflation, pre-COVID and post-COVID,
Right.
you see it, and situation is not in control.
And that is my question. Sorry to interrupt you. What has led to these factors? Because the Gen Zs are frustrated,
They are.
right? So they're saying that the opportunities we had, they will never have. And I'm like, no, you have the opportunities. They're like, no. If we're making $40,000, $50,000 a year and the house is $1 million, how do we afford it? We can't even afford the mortgage. Nonetheless, property taxes, utilities, cars, food. They have a point.
Of course, but it is a collective responsibility. It is collective responsibility, if I can say, central bank.
Yes.
The policies. When the rate has to change, when the rate has to be, the policy has to amend, delay. Yes, Canadian Housing Ministry, I will definitely say, they made delay in their decisions.
Yes.
All the decisions are coming. They're supposed to take these decisions quite earlier.
Okay.
What I can see right now. So that is a major reason, right? And the third reason, all the new houses, lots of investors want to buy because what they learned from 2020, 2021, and till February 2022, when the graph was on top. So by now, sell in 3 months, make 100,000, 150,000, and move on.
Yes.
So that become habit.
Right.
1 or 2 times you got success, you're earning $80,000 annually, and in 3 months, 4 months, you made $100,000.
Right.
You see
The greed.
So that's the right word you choose, and I don't, afraid to say.
Yes.
Whoever made those decisions on that time, the greed was one of the major factors.
Okay.
Yes. So I'm in the mortgage industry, so I can talk about the mortgage industry. Yes. The greed was playing left, right, center. And on top of that, I know something in Hindi in my language, but I don't know exactly what to say. But when you see, you do, basically. What you see, you do. So all the new immigrants were coming on that time. They saw,
Oh, I see. Monkey do, monkey see.
Definitely. So in this case, I know this guy, my schoolmate.
The other way around, monkey see, monkey do.
And anyways, so he bought a house. He just came 6 months before or 1 year before in Canada.
Yes.
And how is that possible, basically? So everybody was jumping.
without any calculation.
And there's another major factor, mortgage fraud. So there is definitely a demand by the broker community that the lenders supposed to check the income of the applicant with Revenue Canada.
Yeah.
So it's not easy because it's a question mark about your personal information to the third parties.
Yes.
But in US, it is. They fixed their problems in 2008 and they are in much, much, much better situation than us. If you UK, yes, they allow. They are the government too. Over there, people living too. The same humans living. So why?
So you want regulation?
Malicious day. Of course, they should be strict in this case, especially. And there's lots of factor. And savings. So is one of the major reason you can accumulate some down payment.
How do you? Okay. You've got Gen Zs that now they don't have the income.
Yes.
They're making 50,000,
Of course.
60,000.
Are they 60, 80,
81,000.
Yes.
Let's even go to 100,000.
Mm-hmm.
How do you change their future and put them into homes? Do you think the house prices have to come crashing down? Like, what is something has to give? So one side you're saying that the regulators have to regulate better.
Mm-hmm.
Then the house prices.
Mm-hmm.
Then how do you make this a marriage, a happy marriage? Like, it's confusing.
Two things: planning,
Yes.
and patience. So you have to plan what the minimum down payment required,
Okay.
and you have to plan how much monthly payment you can afford in shape of mortgage payments.
Yes.
And all the costs of the roof, and then wait patiently. Start saving money in TFSA, RRSP, or first-time homebuyer plan.
Okay. I see what you're saying.
Focus, align, make your 5-year plan,
Right.
right? And follow that plan.
That's very
Because most of the people I'm meeting, everybody complaining. If 100 people in a room, everybody complaining, and who will find a solution?
yes.
You have to find your own solution. You have to buy a house. It's your problem.
Yes.
Problem means like it's your challenge.
Yes.
It's your goal. Whatever you can say that, right? So I will take it as a goal. I have to buy a house. I don't need to complain right now that things happen. Everything is past now.
Yes.
We have to see the present. And the present market is on declining right now. Yes, the house prices are still shrinking. Yes, it's going to happen in 2026. Great possibility. It's going to continue to 2027. I can't say. But right now, there's always there is always a light in the end of the tunnel, but I cannot see where is the end and where the light will be.
Right.
Right? I'm still in the tunnel right now.
Yeah.
So I don't know, the tunnel is going this way. Where is the end? And I can see some light.
Yes.
So every week I'm getting a client. They are on the edge. Like some clients are in the situation that they're living in the house, but so stressful. If I'm afraid if I'm wrong, the income to debt ratio is 180% now. Lots of households need to borrow the money for day-to-day expenses, monthly expenses.
Right.
So that's not increasing. Before, when the house prices were going up, everybody used the equity whenever they have rainy days. But right now, the equity is gone.
There's no equity, yeah.
On top of that, the customers who bought properties in 2020 or 2021, they got a better rate, and now their renewals are coming.
Right.
So again, the issue is that the mortgage payments are going to increase.
Right.
So coming back to Gen Zs again, so income, yes, there are lots of people making income, but how to save out of that income.
And that's
Question is, are there is a room to save? That's another question too.
because expenses in
That makes
that's so many things. It just
yeah. If you are 25, 26, 28, 29 years old, you're having a good job and you don't want to stay with parents because staying with the parents you can save. Some of them doing it.
right.
That you're not paying rent, you're not contributing anything, and even you're contributing is a small amount, for example, because you're living with parents, and then parents don't mind it, and you start saving your incomes. So first of all, this is a lesson learning, and the Gen Z has to start a concept of saving. And generation Y, you can say that, right? They have to start saving for the future plans. And also, lots of people need to change their career also now. I can see it. So who is looking the future in a very a long-term vision? They are making amendments in their lifestyle
Yes.
and their career-wise,
Yes.
and unlearning lots of things and learning lots of new things. Simple. And the future, for example, AI is one of that. So that we have to keep moving on and maneuver according to the time, because right now the time is shifting.
Right.
That comfort level is gone.
Yes.
Even the people in very comfort zone right now, they're worrying about their future, how they can keep that comfort for longer term in future.
Right.
So there's no saving habits and there's no room for savings. Income didn't increase comparable to house prices increase, and policies of the government, greed of the customers, maximum investors coming in market. And another thing I'm going to talk that going to take a very, 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 very long time. Why I call very, very, very for so many times? The reason is that the condominium market,
Right.
pretty much, every project lost the value.
Yes.
So purchase price was 18,000. Appraised value is right now 650,000. So customer has to arrange extra money.
Right.
If they're going to one particular bank, and for me, that thing is very funny. Basically, if that lender is saying, "Okay, I invested in that project, so I have to exit from that project. So I'm giving the value equal to the purchase price, but I need to exit the project."
Right.
But, for example, if a lender's commercial department lend the money and that department is out and the dumping on the risk on the retail. So on the retail side, the customer is happy. Okay, my appraised value is $800,000 with that particular lender.
Yeah.
But if the customer wants to sell that property today, is $650,000. And all his savings are gone, or he borrowed on high interest rate to cover the gap.
Yes.
Because that amount is not smaller.
Yes.
So sometimes, technically, if you see the economics way and corporate way, oh, that is the right way. This is the way of business. Fine, exactly. But when the question arises, when the person will recovering $150,000,
You're destroying future of individuals.
that's the thing, because the value may go more down, and if start increasing 5 to 7% average, then how long is it going to take on top of that?
So is that how do you control that though?
it's not controlling basically. I will say,
or regulate?
you know what I see over here in our country right now. There's a tons of issues, but nobody want to talk about or work on the issues
Nobody wants to talk about it.
because then you have to answer about that. Doesn't matter which political party you belong with, there will be a question.
Everybody's turning their blind eye.
That's it. Everybody is, delaying it.
Yes.
Delaying it. That is not a right strategy. You have to accept it. We are in mess, in a huge mess. And on top of that, the policies that change, especially the products. In 2008, I remember one of the lender brought a product in the market about saying that new generation, the lifestyle is changed now. So their cash flow, they need a bigger cash flow. So if they want to buy a property, 10% down and interest-only payments.
Right.
For very short term, that product came. And it's gone. And it's a high ratio mortgage, means
Right.
the default insurer was also a part of it.
Right.
Today is the challenge in front of Canadians is cash flow. And I'll be happy if the amortization must be going to 30 years to 35 or 40.
Right.
Because B lenders, even private lenders, they are providing that amortization. So they should have to increase. Maybe for the meantime, maybe for the 5-year time, for the 2 years time, the amortization is 40 years right now. So give some breathing room for those Canadians. And especially, for example, I have to renew my mortgage. My amortization is 19 years now. So I cannot change my amortization back to 30 years.
A lot of people don't understand this, though.
So, but I'll be happy to change 30 years because I can have extra cash flow. My payment will be smaller. Fine. Less money will going in equity. Fine. But my today's need is fulfilling. That $500, the cash flow I will get, I can pay my property tax with that. So it's maybe a breathing room for me right now. And that is a need. So I don't need to borrow the money. But who's going to tell and who's going to listen and who's going to understand it?
Right.
Simple thing is that. So right now, my mortgage payment is $2,100 with 19 years of amortization, right? But as soon as it's going back to 30 years, my original amortization, so my payment will be dropped. My monthly payment will drop with that. But see the another way. If you ask lender this question, oh, we don't want to take risk. We want that more equity go in the house, then the cushion for the lender remain there. So in case of default, they will not lose the money.
Yes.
Right? But another way, when they sell the variable rate,
Yes.
where the payment doesn't change, only interest payment increase if the rate of interest increasing. That is not a loss for the lender. Because there's another lender, when prime rate change, the monthly payment also change.
Yes.
Accordingly.
So that was part of my question.
Yeah, but there are lenders, they're not going to increase your amortization, but in variable rate, they cannot see the same risk. I'm talking about the two risk. The risk is going less equity if you increase the amortization.
Right.
Less than the principal, right? And the principal is basically is a cushion for the lender also.
Right.
Same way, if you see in the variable side, if monthly payment is not increasing, only interest part is increasing, less in the equity, that risk is there. So there's lots of things need to amend, and I think so regulators need to talk to the people on the ground level who they're facing the clients every single day. So, what is the common issue in Canadian households right now?
So does the feature of income to debt ratio for future homeowners look bright in your eyes?
The gap is huge.
So does it look good? Do you think it looks good?
The only one thing can make it fix: financial literacy. People has to be more financially educated.
Do you think that will change the future?
Of course,
Okay.
because borrowing should be, with the exit stage. And what happened in the past, the borrowing was not based on the exit strategy
Right.
or considering worst case scenario. Worst case scenario was never considered. Right now, I'm in the situation to buy a house and I took $1 million mortgage. Right? 2 family members
Right.
qualify. Great. Did you ever consider if one of the family member lose a job or get sick, or with any reason your income getting effect
How
or
to survive?
decreasing in the future, how are you going to survive? Nobody thought about that. I hardly seen the customers even have a 6 months cushion when they're buying a house. For mortgage payments, property tax, or utilities, is there any 6 months cushion? No. Now exactly people are buying the house, they should have to have a minimum 1 year cushion. Because the house they're going to buy today, after 3 months, price maybe go down.
Right. I agree with you.
And the job market is very volatile right now.
It is very volatile.
So, yes, I can say if the things are aligned, if your income and your backup funds, so many things aligned well, okay, buy a house. But coming back to the question again, that is definitely bothering me also for Gen Zs. So they are educated, they are well aware, and current affairs, they are, when they talk very bluntly, right? And the only thing they have to add in their habits of getting a financial education about that.
Right.
That is very, very, very important for that. How money works, that really need to understand that. And these days, doesn't matter somebody is, postgraduate and have a degrees, 2 degrees, 3 degrees, even and lawyers, doctors, dentists, and even company CEOs, everyone need a financial education and literacy every step. When you have a zero money in your account and you're starting your career, that's a different level of education you need it. When you start making good money and now you have a certain plans, you have to buy a car, you have to buy a house, different level of literacy you need it. When you move to house, you married, you have kids, then again is a different level of financial literacy needed. And now you are in your late 40s, 50s, you're looking your financial, retirement plan, then you need a different level of literacy when you retired. And then your pension is not enough, you didn't save much, then again there is a different level of literacy needed that we will talk about that. It's a very interesting subject about reverse mortgages.
Right. Okay. Correct.
Yeah. So you see, the base is financial education. We can talk about GDP and inflation and so much these technical words we use when we talk about economy, we talk about money. But what percentage of Canadians can understand it?
Right.
If you Google it, somebody will see out of five Canadians, only one is financially, educated. Basically,
Yes.
that some such as say two,
Yes.
but both are dangerous. If 20% or even 40%, so there's a 60% plus.
Right.
But I can say 80% plus right now. They have to sit with the expert, a right financial advisor related to their mortgages, right, mortgage agent
Yes.
who can find a better product based on their future goals that can align with them, with their current situation.
Yeah.
So that thing is gone away. Because we are, shopping online. And when we start buying the houses online and getting the mortgages online, I'm not against technology. Not at all. But you can get answer for your questions. But mortgage is not like that. For example, a client coming to me, I'm asking some questions, sir. All right, so you want to buy a house? My first question is that why you want to buy a house? Simple. Okay, now I feel like that I'm making enough money. I feel I've saved some money. All right, I want to know exactly what he did exactly and what is in his mind for future and how I can guide him for that. It's not like that. I'm going to ask, okay, how much the house price and how much you make? Okay, let me see. Ratios are fine. Okay, sir. Fixed or variable, go. Oh, no, I'm fixed. It's fine. Okay, thank you. Bye. I got my commission. Done? No. That is dangerous.
You basically believe more in about education in the rather.
Definitely. And not even one, two or three opinions you need it. I've always asked, minimum 2 to 3 opinions you need it. So Gen Z is basically the major reason they are not able to save. 2 reasons: lack of financial literacy.
Right.
Number 2, their lifestyle is like that. There's nothing left.
Yes.
Number 3, that is the harsh reality. Doesn't matter how much you squeeze your expenses, still nothing left.
Right.
And so same thing, plan, patience.
Right.
These are the 2 things I'm going to tell, yes. And I hope the market get better fast. But, when this hope, I know is this the hope right now?
Yes.
Uncertainty is everywhere. So, change your habits, make your habits better, and write down your expenses. Sit one day and write it down, and you can find definitely a couple of holes. Your money is leaking somewhere. Doesn't matter you making 30,000. Doesn't matter you making, even $1 million as a salary. There always leakage of money.
Right.
And we don't even know, or we ignoring it. We have to see, and this is the time to check it out.
Perfect.
So hopefully maybe in the next episode when the same question arises, because that is a very interesting question, I can give you a little better answer that will be more on the positive side and good news side.
Yes.
But right now, the situations are not negative. They are just opposite, basically. So we have to change ourselves to change the situation right now.
Okay.
We don't need to rely all the time on the government or all the time on our MP and MPs, right? And all the time on our neighbors or that person. No, we have to change ourselves first. Simple. And I really want to urge to all first-time home buyers, make your plan long-term. And ask yourself, why I'm buying house in Canada? I came 3 years before, 4 years before, 5 years before.
Right.
Is Is this your country?
Right.
Yes, it is my country. I have a long-term plan and I have to retire here. So I'm not even buying a house, getting a mortgage. I have to align my retirement plan,
Right.
my child's education plan, because you have to raise your families here. Ask the question why you came in this country. Because lots of people are confused. They're living here for years. Do you have a feeling? That is the change.
Yes.
When that change will happen, you see it will impact the economy. Change happens from individuality, the neighbor change. Then I say all the time, when family change, then neighborhood change and everything changing.
Yes.
That is important.
It's a ripple effect.
Yes.
So as you can see, I asked Sharma ji focused questions, and abundance of knowledge, had a lot to share, and I think that's what individuals need. When you want to get your mortgage done, do you necessarily just need a guy who's going to plug in your numbers, but you need somebody who's going to help build generational wealth with you. And I think he's a great individual to do that. So, Sharma ji, I've got another question, and this is a question I don't want it to get me in trouble, because I have a lot of friends, that are builders and they're in real estate. Generally, whenever I've bought a property, or anybody I know has bought a property, the real estate agents always say, now's the time to buy the property. This is the best time. If you go to a builder, they say, now's the time. Whether the economic conditions are like they are now in 2025, or they were like when they were in 2021. Very short and sweet. Because they're your main source of guidance. So why do they guide you in him? Is it just commission? Is it just sales? Like, what am I missing here? Then the second tier question to that is, when you get into those situations, you end up buying houses you cannot afford, maybe in that circumstance, and you miss mortgage payments. Then what do you blame? You blame the builder, you blame the bank, you blame your own decision making. Like, it's two-tier question, but very interchangeable.
So let's talk about that. If you have health issues,
Yes.
to whom you're going to talk?
The doctor.
Your family physicians, right?
Yes.
Are you going to plumber?
No.
So when you have to take money-related advice,
Yes.
are you going to take advice from real estate agent, or are you take advice from a builder?
No, for a financial planner.
Who goes to financial planner or mortgage agent first?
Nobody does that. Right.
So builder is in the business of making homes,
Yes.
right? So they set up a price. They talk about their features. They talk about the amenities they're providing.
It's kind of like buying a car. So
Yes, I talk about the surroundings of the subdivisions, and they have their representative, right? And they pay commission to them,
Right.
And that can be their in-house sale, or that can be a real
third-party
licensed real estate agent, also from third parties, right? And yes, it is a commission-based job, of course. But I'm going to tell you one blunt thing today, that those customers, they ask 1%, 1.5%, or 50% of the commission of the real estate agent when they book the house or condominium through those agents. They have a right to ask. That right advice is not given, because your focus was on the small incentives you're getting, not a right person who can direct you on right directions. Coming back to you now. No, I want to say to everyone, by seeing in their eyes, those customers, they did the mistakes.
Yes.
So coming back to the
point. So you're really saying that it's not really the real estate or the builders, it's us, or when I say us, when I say as a buyer, we're not doing our due diligence properly before we get into that situation.
As a buyer, you know that how much you making. You know that after taxes, how much coming in your account.
So I'm going to stop you one second. So I'm just going to say that, you know what, I was going to be transparent why I'm asking this question. A lot of people have been coming to me and saying, listen, you guys are involved in multiple businesses and etc. Can you help with this? Can you? So I say, what do you exactly need help with? They said, a real estate guided me like this, a real estate guide, and I don't like that either. Because you can't blame real estate agents either. Remember, they're earning a living too. But now a lot of the real estate agents have stepped out of the field. It's economic pressures. Like, who do you blame? Like, my thing is like, yes, you blame yourself because, if you're going to the doctor says, or if you're not going to the doctor and you ask your family, friends, or medicine advice and you take the wrong medicine, you can't necessarily blame the family friend because you didn't go to the doctor. In this situation, you never went to a financial advisor, which is a mortgage agent, or a financial regulator. What do you do in this situation? Right? So who do you really like? Do you really blame anybody, or do you accept that
the answer is actually hidden in this answer. As a real estate agent, my responsibility is to talk about this property.
Yes.
The customer saw during when they visit to see the property, and how many rooms there, how much square footage is there, which area is that, which schools are nearby, what is the crime rate, and based on that, you need a high school in coming 5 years.
Yes.
Which high school?
Yeah.
Is there any private schools? Because families ask these questions, and those are
all other questions.
Whatever their preferences are.
Right.
And then the next question comes, so where to go for mortgages? So real estate agents refer maybe 2 or 3 mortgage agents, or maybe they have a bank's mortgage specialist they are a partner with as a business, as a just referral partners, basically, right? So on that time, the customer has to do their math. I always blaming the customer here.
Yes.
Real estate agent cannot advise about the mortgages unless they have a licensed app.
Yes.
Some real estate agents have a license for mortgage agent also, so they can advise.
Yes.
Right? If someone is advising, that is not basically the right thing to do it. So I'm not blaming here, but I'm questioning myself as a customer. This is my right towards me and responsibility towards myself that this big loan will give me a comfort and peace in the future or not. And very simple, it's mathematics. It's very simple mathematics. You sit and, make a list of your income sources, and after tax, how much you're making. Make a list of your all monthly expenses and see where you stand. A 5th-grade person can do this simple maths.
Right.
But on that time, the hype is that created. Yes, this is a market. Everybody has to sell their products. The real estate agents have to sell the homes. And they have to market about themselves. They have to talk about their success. They have to talk about the trend. So one more thing. The trend was like that. 17, you could say 18, 19, 20, 21, February 2022. So everybody was showing that trend. When you have to invest in any mutual fund also, what you see? The history. How they perform in 5 years, 10 years, and what kind of stocks they are, technology, or maybe, some other stocks. So what is the future demand, right?
Yes.
So everybody talk about the technology stocks these days.
Yes.
So same way the trend was there.
I get it.
But again, coming to the point, worst case scenario was not taken in there. And one biggest mistake and one biggest, you can say, false based, or if I don't use the false word, I will say without any data available, all these new constructions, condos especially, were sold that, you know what, you're booking for $600,000 in 3 years, it will be 750.
So who's responsible for the analysis?
No, but no, it was not analyzed at all.
But who's supposed to do it? Who's supposed to analyze?
Someone, especially as a buyer, I have to see, is there any trend? I'm coming back to the point. I don't want to miss that point. The point is, you book this property for 600,000. In 3 years, based on the trend, it will be 750. You can sell on assignment agreement.
Right.
And I was trying to find some data that in last 10 years, how many condos or pre-construction units were constructed and how many of them got sold under assignment clause.
I see what you're saying. Okay.
Like I booked for 600,000.
I get it.
And after before closing, I assigned to someone 100,000 over. But I want to see the data. And most of the clients, they came to me and asked this question, I can sell on assignment. Okay, who's going to buy it? Someone has to buy it.
Yeah.
When the trend was going high, maybe for a small period of time, the assignment worked.
Fair enough. Yeah. I agree with you. Listeners.
So that the assignment word used millions of times.
Right.
Whenever anybody was advertising about that certain pre-construction or all pre-construction projects. So coming back again to the basis is that as a customer, you have to be aware, conscious decisions with awareness, knowledge, that decision will be a wise decision.
Right.
And on that decision, you look at the pros and cons.
Perfect.
You cannot say, in Punjabi say, "Oh, meri masi de munde ne kya yaar book kara na main book karwa liya." Means like my aunt's son told me, "Oh, book this condo, it's going to be double in prices in 5 years," right?
Right.
So that happened, and that happened because lack of wisdom.
Right.
Knowledge is there, but how to process that knowledge? You have a milk. You can make yogurt. You can make cheese. You can make the milk condense, make some products. But when you're churning the yogurt, then the butter comes. And when you melt the butter, then the ghee, the oil comes. So how you're using your wisdom
is important. Yeah.
Ingredients are there. Knowledge is ingredients. So, and another thing, majority of the customer, or as a human, I can say, people don't want to listen. No. Oh, you're not qualified. Or you will be in trouble if you're buying it. There will be a challenge when you're buying it. They don't want to listen to
The
those
restrictions,
basically.
limitation.
When I give them a facts, okay. Where is the money for your kids' education?
Right.
Where is the money for financial security? You're taking $1 million loan and you don't have a life insurance? Then what kind of decisions you're making?
Right.
So many things basically.
So with that being said, I think you addressed it well. I think it all comes when we wrap up the whole summarization of all the conversations that we had today.
Mm-hmm.
I think financial literacy is key here, whether it be Gen Zs, whether it be medium to medium income families, anybody. And I think I think the onus is upon the individuals buying the houses. It's not the real estate agents, it's not the mortgages, it's not the builders. It's a big investment, probably the biggest investment you're going to do in your life. And I think with what you've said, that's a lot of wisdom. That's a lot of is wealth of knowledge, and I think this is a great conversation we had. Thank you so
It
much.
is, though. It is.
I really appreciate you having me on your podcast.
Thank you. Thank you, Vrind.
Thank you, Mr. Sharma.
Yeah. So it's amazing, and I'm very happy that you spared some time for me today.
Look,
So hopefully next week
yes,
we'll plan to sit again with another topic.
perfect.
But I like this conversation because the whole purpose is to educate
Yes,
the people, then they can make a right decision
yes,
and they can live with peace and happiness.
perfect. Thank you so much.
Thank you.